Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. All right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. Why is it that every Monday rolls around and there's just more and more craziness, right? More and more craziness. Today's craziness comes in more of a comedy format, okay? First of all, we've got the puppet masters at work, meaning the current running president is no longer going to be running. So we live in a simulation, okay? We live in a clown world simulation, and you can't convince me otherwise, okay? Take a look at who is likely going to be replacing. Look at this. Just look at this.
Tested, Madam BP. I know you've been traveling across the country. What are you hearing?
Yeah, girl, I'm out here in these streets. And let me tell you, you're right, Taraji.
We out here in the... I don't care anymore. I don't care anymore. Hey, it gets even better because Montel Williams once brought this woman as a side chick to an awards ceremony. Okay, so you know the side chick angles, and now we got a side chick president. I mean, like I said, we live in a simulated clown world, and I don't care anymore. So, like I said, welcome to the week, welcome to Monday, and welcome to what is apparently a simulated clown world that we live in. In the meantime, okay, we're just going to try my best to keep focused on what is important at the moment. First of all, there's a whole heap of people that were saying things like Bitcoin can't be used as money. I keep seeing this, that, oh, I don't know why you're so bullish on Bitcoin. It's failed. It's a failed experiment. It can't be used to send money. Well, take a look at this, okay? It takes no time at all, probably no more than a debit card transaction, and that's $1 sent almost instantly for almost free. So I hope that was that, okay? I know a bunch of people that for some reason don't like that as an idea, but it is what it is. I also left this here as a little bit of a note to myself, okay? This doesn't make any sense at all to me, and here's why. Traders are now 98% certain that the Federal Reserve is going to cut interest rates by September. So apparently that's bullish for Bitcoin. This is the M2, not the interest rates. And whilst M2 expansion could indeed manifest as liquidity that Bitcoin sniffs out and uses to move higher, okay, I thought it would be an interesting experiment to overlay the Fed funds rate with Bitcoin. So here in blue, we have the Fed funds rate, okay, the federal funds interest rate. And in orange, what have we got? We've got Bitcoin. Now, needless to say, Bitcoin has not been around very long, okay, so we're working with limited data here. But I thought it would be interesting to point at the last time we went from this kind of ramp up in interest rates to a pause followed by a Fed cutting cycle, right? A pivot to cuts. And so you can see in blue, here's the last time we were paused, and here is the onset of the cutting cycle. If I do as best as I can to be accurate with this and put in a vertical line here, okay, what do you notice happens to Bitcoin thereafter if we zoom in? Okay, Bitcoin makes its peak of around 14K, which was 11K if we use a line chart which uses the closes. And once we had the onset of a Fed cutting cycle, okay, this might look negligible to you, okay? But the reality is, Bitcoin fell from a high of 14K all the way down to that C19 plunge of around 3K. So on the closing basis, this looks, because we're using a line chart, like it's not that significant. It's 11 to about 6K. But like I said, we went from a high of 14K right at that moment when we went to cutting interest rates. And we ended up making a major low of around 3K for Bitcoin. And again, if I put in a vertical marker here, what do you notice about the major low for Bitcoin? Okay, occurs when? Right when we reach the bottom of the cutting cycle. It wasn't until rates bottomed out that Bitcoin got to move up again. And I know we're working with limited data here, but I'm seeing a whole heap of people implying that when this Fed funds rate is cut eventually, whether it's sooner, whether it's later, once this starts to happen to the blue, that apparently Bitcoin's going to do this, when I know we're working with limited data, but that is not what the data suggests at all. In fact, what it suggests is you better hope that Bitcoin gets an upside squeeze in the very near term while this stays paused for a couple more months, because historically speaking, once this thing is cut, okay, we are likely to see the top come in for Bitcoin. So of course, as always, if I'm missing something, let me know in the comments. But as far as I can tell, okay, we should not be cheering on rate cuts if we want higher Bitcoin prices. All the while, we have to be aware that we are currently around 100% probability of seeing rate cuts no later than September. And as I've been saying many, many times, I would not be surprised if they show up slightly before then. But again, if we're going to cut in September, okay, there might not be many months of this bull market left. I'm just saying, okay? And again, using this data, it's hard to argue against that for me personally. Again, if you've got something to say, if I've missed something, let me know in the comments as always. In other news, okay, retail interest is as low as when Bitcoin was at 16K. So take a look at this right here, okay? All the way down here at the hard right edge. So we can draw a couple of conclusions from this, I think. First is, retail is not here, okay? Not here at all. It's no more here than it was during the bear market lows. And the second thing is, okay, with Bitcoin at all-time highs, and we've got record low or near record low retail participation. And keep in mind, okay, let's be clear to define retail here, because we're all retail traders. Unless you work for an institution, you are retail, okay? But that's not the retail in this context. The retail in this context are the people that don't even invest at all, that don't know anything about money. They just eventually see a bunch of bullish news and they hop on the bandwagon and throw some money into cryptocurrency markets, okay? That's the kind of retail we're talking about. And when we look at this, okay, they're not here. And so this idea that retail is coming back seems to be consensus in the market. Retail always comes back, right? Greed is a human emotion and people are always going to get greedy. And that might be true of the people that are in the market right now, okay? As the price squeezes up, us guys that are trading Bitcoin or being sensible, many of us will likely succumb to emotions, FOMO, euphoria, greed, and start betting the farm, over leveraging, playing very, very speculative meme coin investments or whatever else. So I'm not saying greed isn't coming back to this space. And when we're, squeezing much, much higher for Bitcoin, I largely expect a whole heap of people to ruin their entire year's worth of gains by getting too greedy, by over leveraging, by adding too much size. In fact, in the level 3 member section video on Saturday, I was talking about this, that the higher we go, the more it's imperative to focus on discipline and risk management and check your emotions and your ego, okay? Just because we're going up does not mean that it's time to start increasing size and leverage, okay? We need to be professionals if you're going to make it in this space, because you can make a whole heap of gains through here and then bet the farm on this final leg only to get wrecked, and your entire journey was worthless, okay? You end up with less money than you started with, or giving back the majority of your gains. That is not how you want to do it. You want to continue to manage risk and be a professional the entire way up. So if you are one of these people that subscribes to the idea retail always comes back, okay, then you are going to be looking for something like this to occur in the not too distant future. But I suggest to you, as I have been very, very, very consistently suggesting the entire time I've had this channel, that retail are not going to be coming back in any significant size this bull run. People are always very quick to point at this and say, Camel, every cycle somebody says this. Every cycle somebody says this. Well, here we are at all-time highs and there's no retail yet, okay? So just keep an eye on that, okay? I don't care about being right or wrong. I have no dog in this fight, but I do not see a scenario where this chart morphs into this personally. In other news, French pension funds can now invest in Bitcoin as the first ETN goes live. As of last week, BlackRock's spot Bitcoin ETF had $1.74 billion in trading volume, okay? Absolutely massive. And this remains the longest consolidation for Bitcoin that we have seen in some time, okay? All the way back here, notice we get to the prior all-time high level. We have a chop around the all-time high. In fact, let me get my special tool out. Take a look at this, okay? There's the prior all-time high. And you can see we chopped around it for 48 days before moving into up only. Now here, we did a very similar thing. There's the prior all-time high in white. We chopped around it for just 21 days, and then we went into up only. And at the hard right edge, okay, we spent 128 days chopping around here. So up only is more than due. I know I see a whole heap of people out there that are pretty sure that once this last final leg concludes, the bear market low is going to end up forming below these lows. I see a lot of people saying that. I don't think that's the case. I think this is much more likely to be a big, big squeeze that resolves somewhere down around this range. I would think this area here acts as very, very strong bear market support. That's my thoughts. Anyway, I don't think we need to go into that because we're going to have a whole bear market spanning potentially 2-ish years to argue about where the lows form. For now, I think we should be focusing on getting that up only squeeze and trying to get out as close to the top as possible. But the amount of time we've spent basing here says to me this is going to be a hot pocket magnet zone to come back down to. What is a hot pocket magnet zone? It's going to be a zone that I target for the bear market lows. Let's say that, assuming, of course, we get a nice big squeeze before it. And Bitcoin against M1 on a 2-week chart bounces off the trend line of a 6.5-year inverse head and shoulders pattern after successfully testing it twice. So what have we got? Against M1, shoulder, head, shoulder, and we have now broken out and retested that neckline of that head and shoulders pattern, which you can see roughly here. Are we ready now to see this emerge? I think so. And the Bitcoin sentiment reset has occurred within a bullish uptrend. If you're still holding through this, congratulations. You can see down here, the first time we flipped red since we were all the way back at around 20 to 25K. And notice in blue, we've got the MVRV 1 year moving average, just about wicked it and now bouncing off strongly. This is a very, very, very bullish setup. And on top of all of this, the Bitcoin Bollinger Bands are the tightest they have been since 2016, hinting an explosive move is to come. Remember, historic compression precedes historic expansion. The tighter we squeeze and the longer we squeeze for, the more explosive the move is expected to be once it's revealed. It doesn't tell us about direction, but it does tell us when the direction is revealed, we should expect a very, very violent and explosive move. Again, bullish, if you ask me. And the best is still yet to come, as you can see here. Simple channel trend line. If we can reach the top, that puts us somewhere around $250,000. It's not a call, it's not a prediction, it's simply a trend line. And as Bob Lucas has pointed out, okay, Bitcoin has confirmed this now, meaning it's confirmed a new weekly and daily cycle low. Pertaining to the weekly cycle low, it is just week 3 of a 26-week average cycle. We are very early and we're seeing great strength here. The monthly looks amazing. We are sitting firm and tight, and we still might take time to break the range, but we've got a full weekly cycle behind us. And according to Bob here, it also means that recent 53K low should never be tested again. Bad news for a lot of people waiting for one more dip to get in. And I said, this whole setup is fantastic. It's glorious, okay? We've got the third angle ready to come in. On top of that, the Elliott wave analysis says we are looking for a fear-driven fifth wave. Actually, that's a good point. I want to stop here and talk about this briefly. The Elliott wave system says that the fifth wave in a commodity, which I believe Bitcoin is more akin to a commodity than it is to a stock, for example, in that fifth wave, unlike the stock market, the commodity fifth wave is usually driven by fear. So I think it tells us to be on the lookout for some kind of catalyst, for some kind of narrative that forces a bunch of market participants to say, I don't care what the price is, just get me in. There has to be something occur in the not too distant future that would drive a fear-driven fifth wave. I don't know whether that could be bank failures. I don't know whether that could be a loss of confidence in the dollar, some kind of geopolitical uncertainty. I don't know what it will be, but I do know that in a few days or perhaps even a couple of weeks' time, we should be expecting something to occur that, like I said, causes investors to be scared not to hold Bitcoin. That's exactly what we should expect to see in a fear-driven fifth wave. It would also be that third and final near vertical angle, and all of this with a full weekly cycle behind us, okay? This is an absolutely glorious setup. I've noticed the bears have become very, very quiet. Nobody is out here being toxic in the comments anymore. The toxicity is completely gone. There were so many people calling me invalidated, saying left translated was off the table, all of this stuff, right? Where are they now? I don't see anyone. And that is because they have realized they were flat wrong and all of their toxicity was completely unwarranted. Remember, if you disagree, you can be sure, and I'm often wrong. That is not a problem. That's just part of the game. But being toxic, okay, attacking people, being malicious in the comments just shows that you have no emotional control and that you probably didn't know what you're doing and then you got wrecked. But all those people that have been wrecked, they're now gone, okay? As I often say, this is a brutal game. Most investors and traders have a life expectancy, or I should say a career expectancy of 3 years or less. Many of these people will have been wiped out in the most recent pullback. That's why the toxicity's gone, because they are gone as well. This is just how the game works. And all I see all over my timeline, people keep tagging me in things. Everyone is looking out to next year for the top, okay? And to that I say, fantastic. I do not want everyone calling a left translated cycle top. I do not want everyone entertaining major tops for the stock market to be occurring before November. I don't want that. I want everyone to be set up to be blindsided, looking out to next year, presenting charts, tagging me in those charts. Hey, Camel, look, you're wrong. We're going up next year. I don't think we are, okay? And the more confidence everyone has that the top isn't until next year, the more confidence I have that we are in, or at least approaching, the inverse situation at the lows. Remember, at the lows, everyone was bearish. Everyone was posting 2008 fractals. And I said, no, no, no. Okay, sentiment is way too one-sided. this is where I think we are at the moment. I think we are slowly setting up for a whole heap of people to be very, very one-sided in assuming the market tops next year and that we're not going to see a recession or any kind of bust until next year. And I actually think we are closer than ever. I've been saying the same things over and over again, and we are now just a couple of months at the most away from those rate cuts, which, as I've shown you a bunch of times, okay, are, at least in this current environment, not conducive to further upside in risk assets. This setup is glorious, absolutely glorious. If you're a level 3 member, look out for the notifications this week, because we're going to be looking to get behind some cycle lows for the stock market. We're also going to be playing a little bit more patient to see if we can get some kind of rollover here, a weekly cycle low for the metals, and again, I'll update you there. For Bitcoin, it's very, very binary, as it often is on this channel, okay? Above the cycle low, above the second angle, long and strong continue to push. Some kind of, I know a lot of people are calling for this gap backfill. Can't rule it out, okay? Don't mind seeing it, but to me, it says we're probably going to do something like this and look for a third angle. Again, looking for a top way before everyone else is. And if we really are going to see this, then we need to see a failed daily and weekly cycle for the Dixie. So going to be keeping an eye out on that. I'm just noticing the bonds are red. Okay, what about the 2-year? A little bit of a counter trend bounce. I'm going to draw a repair line in here and we'll keep an eye on that just in case. But all the while we're contained under resistance, all the while the bond yields continue to move lower, then again, I am here to tell you, okay, the Fed is done hiking rates. The Fed is done remaining paused, and cuts are coming sooner than most people are ready for. So welcome to the week. Welcome to Monday. What a time to be alive. Everything's going to keep getting more and more wild, and the Camel Crew, as always, is going to continue to stay on the right side of it, regardless of what scenarios continue to play out. Other than that, I hope you're doing well in life. I hope you have a fantastic week. And until next time, take care from me. All the best. Cheers. Bye.
Let's rationalize rapid shoplifting, make skin color a perk. Blocking all streets for climate change, people can't get to work. Endorse mostly peaceful protests, expecting shops to stay. Won't let you cry about